Ladies and gentlemen, good day and welcome to ITD Cementation India Limited Q1FY22 results conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Adidev Chattopadhyay from ICICI Securities Limited. Thank you, and over to you, sir.
Yeah. Good afternoon, everyone. On behalf of ICICI Securities, I'd like to welcome everyone on the call today for the ITD Cementation Q1FY22 results call. Today from the management, we have with us Mr. Jayanta Basu, the Managing Director, and Mr. Prasad Patwardhan, the Chief Financial Officer. And I'd like to hand over the call to the management for their opening remarks. Over to you. Thank you.
Thank you, Adidev. Good morning and welcome everyone to our Q1 earnings call. My name is Prasad Patwardhan. Let me first start with the financial performance for the quarter, and subsequently Mr. Basu will brief you or take you through the operational performance of the company. This quarter was again impacted by the second wave of COVID-19. Of course, the impact this quarter was significantly lower than what we saw in the same quarter in the last financial year. And the improvement in our operational performance as compared to June 20 is quite visible in the numbers that we have reported yesterday. Our total income for the quarter is 828 crores, which is an increase of more than 105% as compared to last year. Our EBITDA has also improved. The margins have improved by about 160 basis points on a Y-on-Y basis. And in terms of profitability, we have reported a profit of 18 crores as compared to a loss of 17 crores in the April to June 20 quarter. Our debt continues to be within limits, and the debt equity ratio as of June is a little under 0.5 times. Our order book as of June end is about 12,036 crores, and this comprises mainly of urban infra, metro and airports, which is about 31%. The marine segment contributes about 27%. Hydro dams and tunneling is 17%. Industrial structures is 13%, and water and wastewater is about 8%. In terms of order wins, we have secured orders worth about 1,600 crores during this quarter. There's one large project of 900 crores for industrial infrastructure works of road and train development in the state of Karnataka. We have received one order from Gujarat Metro Rail Corporation for development of some buildings in Surat. We have also received one order from Military Engineering Services worth about 250 crores. So these are the orders that we have secured during the quarter. The opportunities in the sector are, there are a lot of opportunities coming up in the sector, but we'll speak about that a bit later. I'll now hand over to Mr. Basu for his initial comments, and then we'll take your questions. Thank you.
Good afternoon to all. This is Jayanta Basu. Thanks to all of you for joining this Concall. As you have just seen our financial performances declared yesterday for the Q1 of this year, it has partly hit by the COVID second wave. And in fact, in the last Concall, which was in June, 1st June, as because already we were in Q1 that time during the Concall, we added that there will be a decline of 15 to 20%, and it is exactly that has happened. So our revenue is little bit down compared to what we have expected in the beginning of the year by 15 to 16%. Otherwise, this is in line with the industry. As you can see that in other company also, the revenue and the other performance parameter has been hit due to the second wave of COVID. As it happened, you see the most of the work we are doing today in Karnataka and Bengal. I think around 60% of the work we are doing in Karnataka and Bengal. And unfortunately, these two states was hit most during the lockdown. Project Seabird at Karnataka, Bangalore Metro, and in Calcutta Metro, and some job in the north of Bengal, all projects were totally locked down for more than a month, including one marine job in Andaman. So that has affected a lot in our revenue and other parameters. Otherwise, generally we have done well, and if I want to highlight major project what we have done during this quarter and their performances. Starting from the MRTS underground metro at Bangalore, as promised last Concall, we have already started the tunneling with both the tunnel boring machine, TBM 1 and 2, and we have done a little bit of progress in that tunneling at Bangalore Metro, and already I think we have achieved around 14% progress so far, as you have expected. Calcutta Metro, we all know that tunneling have been completed. During the last Concall, we have intimated that, and so the balance work is going on. Maybe by end of next year, we'll be able to complete the whole work, which includes the station buildings and finishing work and other mechanical electrical activities. Mumbai Metro also under control. One of the activity in Mumbai Metro is NATM, that is drilling and blasting of the stations, which has to be done by different method, which was a very critical item once upon a time. Happy to inform you that around 85% of that activity has been completed, and maybe by end of December next year we'll be able to complete the whole work. Similarly, in the elevated sector, Bangalore Metro, 4 jobs. As I have mentioned last time, all the 3 jobs is virtually completed. Maybe 1 and 1.5% is left out, which is finishing activity, except one job, which is we have done around 83%. So altogether, if you see, around 180 crores of job is left out, which will eventually take us to the next year, middle of next year. Nagpur Metro virtually completed. One job 100% completed, another job is 96%. So this is all about our urban and infra sector. Marine also hit by COVID. As I said, Port Blair and one job in Seabird, that is in Karwar, both the jobs are badly hit by COVID. Otherwise, performance-wise, it is quite okay. Udangudi going well. Surprisingly, Yangon job at Myanmar, despite of all the odds like coup and the COVID, it has done better than what we have expected during last quarter. Pamban Bridge at Tamil Nadu has picked up a lot and progressing well. There are some new jobs also we are expected, which we have secured. That is, we have just got a job yesterday we just got a job for Ultratech. Their jetty repair was small job, which is going on for some time for discussion. So Marine as a whole is doing well, and there are a lot of prospects which we'll discuss later on. Urban infra also doing well. In terms of the industrial structure, Trichy Airport, Pune Airport, progress also hit by COVID, but we have done around 50% in Trichy and 44% in Pune. So this is all about our major jobs progress as I have explained to you. Now going forward, our work in hand is consistently around 12,000 crore. So that is good thing, and we have secured around 1,600 crore job during the first quarter. But there are plenty of jobs in pipeline, and maybe it will be around 35,000 crore of job which we are pursuing through various stages, either under tendering or we have submitted the bid. And if you see the breakup, for underground metro, there are a lot of prospects. Delhi Metro, there are 4 tender will be submitted next week, comprising around 9 to 10,000 crore value. Kanpur Metro, Chennai Metro, and Agra Metro just come today. So all these 5 or 6 metro job together itself is around 18,000 crores. Similarly, Marine also we have got around 8,000 crore visibility, and some of them we have already put our tender. Airport sector, 3 to 4,000 crores. So put together around 35,000 crores of job we are pursuing now. The idea is to minimize the number of projects and try for the big ticket job to optimize the cost and look suitably overseas opportunities which are coming through the Exim Bank Indian line of credit. And today, if you see the job mix, we are in a good job mix. Like marine, we have got around 30%, and urban infra around 25 to 30%. Airport is around 10 to 15%. So this is a situation about our present work in hand, and with that, we hope that this second quarter will be little bit down because of monsoon, but from third quarter onwards, we'll be able to pick it up. That is in nutshell about the operations. I will request you to come out with your questions. We'll be happy to answer them.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good morning, sir. Thanks for taking my question. Congratulations in very torrid times that we saw. Sir, just to basically get an idea.
Sir, your voice is breaking up. We are not able to hear you clearly.
Is it better now?
Much better. Thank you.
Yeah, sure. Sorry for that. Sure, sir. So thanks for taking my question. Sir, my question was on the overall performance. I mean, we've had a very strong performance in this quarter despite the COVID impact. So any kind of guidance that you could provide that we're looking for in terms of top line and margins for this year?
Well, as I think we have touched upon this issue last time also, and see this quarter, that is quarter 2, also will be similar to quarter 1, because all we know that monsoon will affect, and there are some effect of COVID still going on. I hope that we'll be able to increase the performance in terms of revenue by another 15-20% from quarter 3 onward.
Right.
You can figure it out. Quarter 3, quarter 4 will be around 15-20% more than quarter 1 and 2.
Okay.
EBITDA margin to maintain whatever we are achieving, just double-digit margin. So that is what I can say at this stage.
Sure, sir. And sir, in terms of margins, we have seen the commodity prices shoot up recently. So I know most of our projects would have those pass-through contracts in which the commodity prices are taken into account, the latest one. But would there be any impact on our margins because of that? And related to that, if you could just share that what percentage of our order book could be fixed price contract?
Look, commodity prices increase is a concern to all of us in our fraternity. Yep. And I think this we have discussed last time also. More or less, it is impacting around 1.2 to 1.5% from the budgeted price. But those are the jobs which we have secured pre-April this year. But thereafter, whatever job we are securing now, we have taken cognizance of this number in our estimate. So more or less, we should be okay with our provisions. What we have in contingency, we'll be able to manage it.
So you mentioned 1.2 to 1.5% of the project cost. That is the escalation, is it?
Yeah, actually, if you see today, we have to execute around 12,000 crore job.
Right.
In 12,000 crore, maybe say the cost escalation will be around 140 crores in a span of 3 years.
Okay.
So in that way, it's
right.
1.28%. These are very top line number.
Correct, sir. Broad level numbers.
Because the indices are also varying. Today we have calculated based on today's indices. Until we expect them to go up. That means the escalation payable to us will be more. But just For a guideline purpose, these are the numbers we can presume now.
Great, I really appreciate that. Sir, my related question was what percentage of our order book would be fixed price contracts, which do not have these raw material price to benefit?
Well, most of the contracts are, escalation is payable. I think around 65 to 75% escalations are payable. 30-35% will be fixed price contract.
And these would probably be in the marine segment, sir, I would assume, the fixed price one?
Basically, the job which we do for the private sector, they not cover the escalation, which we have to include during our bidding price. But otherwise, the metros and any other government job, they are normally escalations are payable.
Right. Sure, sir. So just one last question. I wanted to pick your brain on the bullet train project. I know we've spoken about this in the past. Last year we were quite hopeful, but of course we saw almost all the packages went to the L&T group. Now, is there any more basically packages left in that? Because what we understand is I think most of the projects in packages in Gujarat have already been bid out, and in Maharashtra I don't think so there is clarity on the land acquisition part. So is that an opportunity that we are still pursuing, or that is something which is kind of gone and probably not much left in that any which way?
No, we are very much there. I think our focus was always on the track laying contract, which is something new to India, and we have already some sort of tying up with the Japanese company because it will go to Japanese.
Right.
But those things will come not now, maybe after 1 year or so. So that is our some of the focus job in high-speed rail. Apart from that, the other thing which is probably we don't know because it is in Maharashtra, the big tunnel work between PKC and Thane. Some of the big party from outside will do, and we'll try to tie up with them. So that also we are keeping our eye on that.
But sir, is there any clarity on the sections in Maharashtra or no, as of now?
Not yet.
Not yet. Sure. Great, sir. Thank you so much for taking my questions. I'll get back in the queue if I have anything else.
Thank you very much.
Thank you. The next question is from the line of Mohit from DAM Capital. Please go ahead.
Yeah. Good morning, sir, and congratulations on a decent set of numbers given the challenging situation. So my first question is, sir, has the work now commenced in Karnataka and Bengal with some kind of normalcy? Are all our sites working now?
Yes. I think from second week of July in Karnataka we could able to start the work, and in Bengal I think it has already started in the month of from June. So now all the fronts, all the projects are open, going on in both the states.
So my second question is, so we have 2 or 3 marine orders. One is which we're chasing, especially on the JNPT side, and secondly on the Sri Lanka side he has won the terminal. Is there any progress on those contracts?
Well, coming to your last one, that is Adani Colombo, that we have already submitted our preliminary proposal, which is basically technical one, that how this job should be done. And based on the feedback from the contractors, and we are one of them, the tender preparation is underway from the Adani, and we expect by any time, maybe by end of this month, we will get the tender document. And thereafter, another 3-4 months to submit bid and finalization. And BMCT, of course, it will go beyond this monsoon time because they are not in hurry to do the work now because traffic is less. But as I understand from them, sometime during 3rd or 4th quarter, the tender will again revive. So that is about BMCT.
Are there any opportunities available on the railway side like Shivak Rangpo or the Rishikesh Karnaprayag?
There are plenty of opportunities, plenty in the sense there are a lot of railway tunnel are coming, and there are inquiries as well. But we are not that much keen because we already have 3 big jobs in shape of around 4. So as it comes, we'll see that, but we will not be so interested at this stage to take up such job again.
And lastly, on the airport side, so there's 30 to 40 billion opportunity. These are most of AI, or are you baking in some private opportunities?
I think AI, at this stage, we don't see any tender we are working, but there are private, basically Adani. They will be definitely coming up with the renovation of all the airports which are secured. So as it comes, we'll definitely be there.
Thank you, sir. Thank you. I'm done. Thank you.
Thank you. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Dhruv Galada, an investor. Please go ahead.
Thank you, sir. Adani Ports and Cess has said that it will abandon its Myanmar project and write down the project investments in full if Myanmar is classified as a sanctioned country under Office of Foreign Assets Control of the United States. Considering the worst case scenario, if Adani Ports does abandon the Myanmar project, can you discuss the impact this will have on the company?
Well, I think many a times we have addressed this issue even in last month. The news, whatever you have got, it is not totally correct, because there was something going on in terms of sanctions. Adani is following the norms or not, but they have proved that they are not going against the sanctions. Whatever they have done as per within the norms of US government. So there is no issue on that. And as far as we are concerned, we are working in full swing. Okay, it is affected due to COVID and the coup, which is totally different issue. But as far as US sanction is concerned, there is no impact on us. And as I said before, that in fact we have done better in Q1 than what we anticipated. And number 2, we have been paid properly. Till today, whatever work we have done, all the amount has been paid by Adani. Of course, we are keeping very close touch with Adani top level, and there is no signal that there will be any effect on that.
Sure, sir. So you're saying that there's no major risk. Can you also give us an idea of how much of the project is completed in the Myanmar?
The total value of the job is around 560 crores. Out of 560 crores, we have so far completed, just give me a moment, 235 crores till June.
Okay.
41%.
Okay. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yes, sir. Thanks for taking my question again. So just wanted to get your view on the payment cycle right now. How is the overall receivable cycle? Are the government bodies paying up on time? And also on the set of the private clients that we have, what is the general tendency? Is it better than what it used to be earlier, or is it a bit delayed in the overall sense?
There is not much significant variation than what it used to be earlier. And because yes, of course, Q4, Q3 last year, it was affected by the COVID because many of the government officials were not able to come to office. Now that situation has changed. But some of the government agency like Airport Authority of India, their revenue has come down. So they are under little stress to pay to the contractor. So there is some delay in the Airport Authority of India. Otherwise, we don't see any issues in terms of their mechanism is concerned. We are being paid on time.
Sure, sir. And Prasad sir, if I could just get a bookkeeping question, what was the debt at the standalone level at the end of the quarter, and also the cash? At a console level, sorry. The total console debt and the cash numbers.
The gross debt on the books as of June end was about 515 crores, and we had cash
Right,
on
sir.
the books of about 60 odd crores.
60 odd crores.
Yeah.
Sure. Great. Thank you, sir. Thanks for taking my questions and wish you all the best.
Thank you.
Thank you. The next question is on the line of Ashish Shah from Centrum Broking. Please go ahead.
Good afternoon, sir. Sir, just wanted to check on this Mumbai Underground Metro. There are some news that the government is yet to approve the increased project cost, because of which probably JICA is unable to disburse any more installments. So any impact it is having in terms of our payment cycle or execution of the projects, if you have any sense on that, sir?
Not at all. I haven't heard it, and we are being paid on time. We have not seen any problem so far.
Okay, sure. And sir, what could be the percentage completion of our scope, sir?
Around 73%.
73%. Right. And how does the timeline look now in terms of full completion?
We would be able to complete by sometime during end of next year, December 2022.
December 22. Right. All right. So secondly, in the water segment, we have any intention to get into the drinking water projects, the Jal Jeevan Mission, or we'll probably refrain from that?
We tried to dig into that, but basically what happened, one component is to distribute the water line to the people, which is something very localized job, and we still do not know how to handle those issues. So not really, but if it is just intake and water treatment plant, if it comes in that package, definitely we will be there, and we are already there. We are doing a couple of jobs of that nature. But once it comes to distribution of the water to the public, we may not be so interested.
Sure. And so lastly, on the irrigation side, do we have any sort of exposure to AP and Telangana, or there's nothing that we have at the moment?
Yeah, one job we are doing in Andhra, that
Okay.
is place called Paranhita, which
Okay.
is going on for a long time, and the job has picked up now, doing well.
So, sir, is that any way affected by this recent action of the central government taking over the projects and trying to regulate them? So, does our project fall into the scope of the approved projects, or it probably will need to go for an approval? Any sense on that?
No, actually, since last 1 year it has improved, because
Okay.
there are some suspension of the job because of some technical issue. But since 12 months or 14 months back, I think the progress is much better than before, and we are being paid on time.
Sure. So what's the outstanding value of this particular project?
In terms of the value, it is around 950 crore job. So far, we could do around 300 crores, so around 650 odd crores is balance.
Got it, sir. Sure, sir. Thank you. Thank you for your answers.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Venkata Subramaniam Raman from Organic Capital. Please go ahead.
Hi, thanks for taking my question. I just have a little bit of confusion on a few lines below probably the EBITDA line. Between quarters, we have fairly significant swings in terms of PAT percentages. For instance, in the March quarter, we had close to about a 4.5 to 5% kind of a PAT margin, while it sinks all the way down to about 2% in spite of about 10.5% EBITDA margin. Is it a function of order composition, or there are other variables? Can you try and guide us, please?
It's a function of the projects that get executed and how they constitute our turnover within that quarter. One more thing is, if you see the scale of our operations in the quarter ending March 21, our top line was significantly higher.
Sure.
So, that again aids, improvement in the EBITDA and the PAT margins, whereas this quarter was again impacted by COVID. So that is what is
Sure. The swing, in any case, Mr. Prasad, is fairly significant. It kind of halves from 5 all the way below 2. So to that extent, are there more COVID-related expenses here? One clearly realizes the operating leverage, the deleverage that's happened. That's fairly significant, as you rightly pointed out, almost about 200 odd crores. But there are probably still a few more elements which I'm missing. So I thought I'll check with you.
No, see, there are multiple factors. We are doing about 30-40 projects all over India. So, all these projects get impacted in a different way. Secondly, the increase in the raw material prices, that also has an impact.
Right.
Some of the projects may be more labor intensive, while others may have more, material related work happening in the quarter.
Sure.
So all these things put together, the end result is the numbers that we put out every quarter.
Sure.
But broadly, the reasons that I mentioned just now, these would impact our profitability and the numbers that we report.
Appreciate, sir. Appreciate. Roughly around 3.5 to 4% on a steady state basis will be a fair assumption.
No, I don't think 3.5-4% would be the number going ahead. My guess is it might be a little bit lower than that.
Okay. Thanks for your help, sir. Thanks.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star and 1. The next question is on the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question. So my first question would be on the revenue which we expect from the new projects. Like obviously we have seen our legacy projects are getting over now. So what kind of revenue run rate we can expect in terms of execution from the newer projects and the targeted margins from these projects for this year and next year probably?
Well, I think there are quite a number of new projects. Those were quite big.
Right.
So we expect them to contribute now onwards.
But any key projects you can highlight also will be fine, sir.
Yes. Number one is Seabird Karwar, a marine job, which is the value is around 1,200 crores. So now the initial setup is already done. But just because of monsoon, as you know, the Karnataka that so once the monsoon is over from September or October onwards, it will start generating good amount of revenue. Similarly, we have a job in Delhi for CPWD building work. It got caught into the forest department and there are a lot of trees to be cut, which has been resolved now. So once that is done by another 1 month time, so it will start generating revenue. And third one is Bangalore Metro Underground. As we have just mentioned in the Concall that we have already started tunneling. So big amount of revenue should come from those two, that job. And
so these, yes sir, please continue.
One more job in Project Seabird for water segment. As you know, we have just secured it. It's a 900 crore job.
Yes.
So that also will generate revenue. So as I can see that from new jobs, around 50%, just gut feeling, revenue will come from the new jobs, as I mentioned.
This year. So I know the revenue guidance is difficult to give because in the current uncertain, but can we factor in 10 to 15% growth this year, looking if things improve in the second half?
Yeah, compared to last year, at least 15% growth in top line.
And with a double-digit margin like 11-12%, can we expect something which we have been, directionally?
12%, but yeah, double digit is definitely expected.
Okay, sir. And sir, a few bookkeeping questions, Prasad sir. So can you give us the detail of the outstanding mobilization advance, unbilled revenue, receivables retention as on June, sir? And inventory?
The mobilization advance, unadjusted mobilization advance will be close to 500 crores.
Okay.
The unbilled revenue would be around 1,000 crores.
Okay. Retention and inventory, sir?
Inventory would be in the range of the retention dues would be about 250 odd crores. Inventory would be in the range of 300 crores.
And sir, the bank limits. So last time we were talking, the bank limits are expected to go up. So what is our new non-fund and fund-based limit and the utilization level, sir?
No, presently there is no change in our fund-based and non-fund-based limit. Utilization also remains at that same level. But the good thing is we have got a couple of sanctions from, a couple of existing banks in our consortium and one bank which was not earlier part of our consortium. So, these limits, we expect them to be operational maybe in the next month or so. So the sanctions from the banks have started flowing through now. Hopefully, they should be operational as and when we get the sanctions. But 2 sanctions are already in hand, and we should be making them operational maybe in a month or so.
And sir, on the capex side, so any capex you are targeting this year and how first?
No, the general capex that we incur is on replacement of our, construction plant and equipment, and that continues. In this quarter, we have spent about 20-25 crores on capex. And the run rate is expected to be at the same level unless there is some new project which requires us to really spend on capex in a big way. Let's say we get some project which requires us to buy some new equipment, then that will be an additional capex that we'll incur. But otherwise, we expect the capex to be at the same level.
Can do this shit. Right, sir. Right, sir. So that's it from my side.
Thank you, Jiten.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So I joined a little late, so I'm not sure if it has already been answered or not. Just want to understand, the kind of the gross block that we have, the equipment base that we have, what kind of top line is possible for us? Without any significant capital or only the maintenance capex. What kind of size is possible for us?
Yeah, you are asking for the top line.
Yes, sir. Top line.
See, the first quarter, as you know, second quarter also will be in line with that, as because monsoon will have some impact. But we expect third and fourth quarter will be at least 15-20% better than first 2 quarters. So, in terms of top line, you can more or less it will be 15-20% more than last year.
No, sir, I was not asking for FY22 guidance. It was more from the size that is possible with the current gross block. The size that we have in terms of equipment bank. What kind of number is possible with the same? If you were not to incur any significant capex incrementally, what kind of size can be taken care of with the current equipment bank?
Well, you see, as a normal practice, every year we include some plan to replace the old plan.
Yeah.
So that is very standard thing. Otherwise, to have new plan for the new job, of course, it will be there. But generally speaking, to maintain the same level of capex what we spent last year, if we have to spend the same amount of capex, we should be able to do 4,000 crore plus job at least.
Okay, so any number beyond 4,000 would need you to incur more than your replacement capex. Is that the right understanding, sir?
Yes, you are right.
And the second thing was, when I look at the way we've been able to grow, I think till FY17 we used to be around 5,000, 6,000 backlog, and we've grown to almost around 12,000 crore rupees now. So we've transitioned, from 6,000 to 12,000. So what kind of top line number or revenue would make you go for even higher order backlog? In terms of the visibility that you would want to maintain, and would need you to have more in terms of order backlog.
Well, I think consistently for last 3 or 4 quarters, you see our work in hand is around 12,000 crore.
Yes.
And as I have mentioned that we are now looking for big ticket jobs, and so order backlog has to increase, and that will definitely have some effect on the top line. Exactly, I'll not be able to tell you what will be the number, but as I said that 10-15% growth will be there in terms of both top line and the order booking.
Sure. And just one last bookkeeping question, Prasad. Would you be able to help us with the standalone cash and cash equivalents, please?
Well, I just answered that question a few minutes back. The cash on the books is about 50-60 crores.
No, standalone would be even lower than this, or the similar number?
No, it's a similar number. There's not much difference between the standalone and consolidated cash on the books.
And how about debt at Bangalore SPV now? Has that come down now, or is it still the same? I mean, the same as last quarter?
Well, it has come down to 0 now.
Okay, sure. Sure. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to the management for the closing comments.
I would like to thank everyone for joining us on this Q1 earnings call. I hope you all stay safe and your families are also staying safe. Look forward to interacting with you again next quarter. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.